Hi, my name is Toxio Gunyemi. I'm the president of Evergreen Anchor Capital. We're putting together this video series titled My Not So Crazy Mortgage. And that's because we've helped hundreds of people obtain mortgages over the last few years. And what we're putting together is a lot of the questions that people ask on how to get the best mortgages, because there is a right way to get a mortgage and a wrong way to get a mortgage. There are people who have, based on their being prepared, obtained much better mortgage products, much better interest rates than those who came and were not that prepared. Also, the process of getting the mortgage was a lot smoother for some people. We've had folks that we close in as little as 10 to 14 days, while we have others that we close them in 21 to 30 days, which is the standard time out there. But sometimes it's a bit of a grind simply because they weren't prepared. And so we're putting out this video series to help answer a lot of those questions on what best to do in order to be prepared to get a mortgage. So if you're interested in the information that we're about to present, please subscribe down at the bottom so that every time a new video comes out and is posted, you will be notified about it. And of course, if you have any comments on any particular items that you'd like us to talk about, please go ahead and indicate that there and we'll be happy to do so. But we've got a whole lineup set for covering different topics. So I'm sure we'll at some point we'll cover whatever questions that you may have. Now, owning a home is a great thing. There are many statistics out there that show the benefits of owning a home: pride of ownership, stability of the family. It's a great investment that can appreciate in value. There are tax breaks associated with owning a home. All of these are great things. Now, homes are expensive. A home is probably the single largest item that a person is going to purchase in their lifetime. And the best way to purchase a home, of course, is by paying cash for it. But it's difficult to put together that amount of money to buy a house. We're talking about hundreds of thousands of dollars usually. So thank God that there are mortgages. A mortgage is out there to help you with purchasing a home. And there's a right way to do it, and of course there's a wrong way to do it as well. And basically, there's a box that if you fill that box properly, you'll be able to get a good loan with the best options and that are available out there. And if not, you may still be able to qualify for a loan, but it may be a little bit more expensive than the person next to you. So hopefully we'll be able to go over all the items that will help you get the best mortgage that's available out there for you. We're going to start today by talking about the credit report. Okay, so the credit report is very important. Whenever you come and you want to get pre-qualified for a mortgage, you want somebody to take a look and see how much you qualify for, or if you'll be able to obtain a mortgage. One of the first things that they do is they look at your credit report. And why do they do that? Well, because the credit report is what lenders use to see how you've handled debt in the past. What was your payment history? Were you paying back the other debts that you borrowed on time? How much debt do you have? Is it so much that you won't be able to pay back the loan for this house? Have you just stopped paying on other loans? Because if you stop paying on other loans, very likely you're not going to pay on your mortgage. What different types of credit do you have, and so on and so forth. So the credit bureaus, which there are three of them, there's Experian, TransUnion, and Equifax. That's what they put together. They put all that information together, and then they generate a score, and each of them has different, they have different scoring models that they use. But that's what makes it very easy for someone who wants to extend credit to you to just take a quick glance, look at your history, look at what your score is, and based off of that, decide and determine if they want to give you a loan, and if so, what type of loan and with what terms. So you getting prepared with what is on that credit report it's important to do that before you apply for a mortgage. And so how do you do that? How do you pull a copy of your report in order to see what's on there? Well, you can go to annualcreditreport.com, annualcreditreport.com. So everybody is allowed one free credit check from each of the three bureaus a year. In some states, you're allowed actually more than one. Sometimes you're allowed twice, but Definitely everybody is allowed at least one time. So, and it's for free. Now, this doesn't give you a score, but it at least gives you all the trade lines that are on there. If you want to score, you can pay for that as well. Nah, I don't know if I would go as far as doing that at this point when you're just starting, but you want to look on there and get a copy of your report first to see what you actually have on there. We've had folks that come to us, they're ready to buy a house, they're all excited and all that, and when we ask them, what does your credit report look like? They've not pulled it in years. Now, it doesn't necessarily mean that it's going to be bad, but you never know what's been reported, on there. So you want to be aware of what's on your credit report. So once you pull that report, you can also go to Credit Karma. We've had clients who use, Credit Karma. Just be aware, Credit Karma only pulls from two of the bureaus, TransUnion and Equifax, I believe is what they pull. So they don't pull all three. You may ask, why all three? Well, not all credit companies report to all three bureaus. Some report to one, to two, and not necessarily to all three. And so you may pull one report from TransUnion and it's got, as an example, 5 items on it. But you may pull one from Equifax that's got 7 items on it. So the scoring on each of those reports is going to be different because they've got different items on there. What if all the 5 that were on Equifax, or I think TransUnion was my first example, were all good, you're paying on time, and those same 5 are good on the Equifax, but you've got 2 that are on the Equifax, not on the Experian, or the TransUnion rather, that you're defaulted on. Well, this report right here is going to have a lower score, and this will have a higher score because it's got the derogatory ones on there. So that's just an example of why you have to look at all 3. So what do you do when you get that credit report? You first want to review the trade lines. You want to look at the trade lines, and a trade line is simply a credit account, a student loan, a card note, a credit card. That's what a trade line is. You want to look at all the trade lines on your report and make sure they're legitimate. Make sure they're actually yours. A lot of times people who haven't checked their report in a while open up their credit report and find things on there that they never knew were there. They didn't even know what they were. If you fall into that category and you find something like that, you need to dispute it. You need to, well, first of all, you want to think back and make sure it definitely isn't one of yours, because a lot of times people just don't remember these items and it ends up on their credit report. So you want to look. If it's definitely not yours, then you want to call the credit bureaus, and you want to dispute that particular trade line and say, hey, this isn't mine, and the credit company has 30 days to respond and to show proof that that is indeed yours. Otherwise, they have to take it off. So if there is something on there that is not yours, you definitely want to dispute it. But if it is yours, then you want to look at all the different items, see if you have any late payments on there. I mean, you would know probably if you have late payments, but see what is reported as the lates that you have. Late payments are not good for your credit report. They really bring down your score. So if you have them, you legitimately have them, it's okay. Not much you can do about it if it's happened. Just make sure going forward that you make all your payments on time, and that will help bring your score right back up. So you want to review all those trade lines and make sure every trade line that's on there is actually yours. See what is being reported as being late or not late, and make sure everything is as it should be. Look at the balances that are on there. If the balances are too high, you're going to want to bring those balances down in order to help get your score, up. Also remember, high payments on there. If you have high monthly payments, that's what the bank looks at when they're trying to see how much you qualify for. So if you've got trade lines with high payments, those are some that we're probably going to want to bring down. So how do you improve your score? Well, of course, you want to pay your bills on time. If you pay them on time, get rid of those. It will stop you. Won't have those late payments on there that hit your credit. So paying on time helps get your score up, over time. You can pay down debt, so you can pay down, not necessarily pay off and close the trade line, because that can also affect you adversely, but you want to pay down the debt. That also helps in bringing up your score. If you need to add an authorized user, now an authorized user is somebody that has, say, another credit card and allows you to be a user on that card. If they put you on there, that card's information and that card's history also gets added to your credit report, and that can boost up, your score. You just got to be a little bit careful about that. Be sure you're pulling in a card that has good information. Don't pull in something derogatory, and make sure it's with someone you have a very good relationship with, because if you need to take it out, you want them to, to do that as well. We had an issue with somebody that was here looking to purchase a home. Everything with her credit was great except this one trade line that was an authorized trade line from someone who had helped her in this same situation a few years earlier. She had not remembered to take it off. That line, that authorized user, had actually gone into default, and the person who owned it did not want to take it off her credit. So it caused a little bit of an issue, but we were able to resolve that eventually. So just make sure that if you're getting an authorized user, it's somebody that you're close to and who won't create any issues for you going forward in the future. Also, you may need to get a new trade line. If you get a new trade line, that can also potentially help boost up your score. More banks are looking for at least 3 trade lines. You can get a mortgage without having 3. You can get it with 1 or 2, but 3 is the ideal number to show that you've got strong credit history. A secured card is a very good way to get a new trade line. It's not technically a credit card. It's like a savings account with a card that operates like a credit card and is reported like a credit card. So that helps boost up your score, of course. And then limit credit pulls. You don't want too many people pulling your credit, because it does affect your score. If a mortgage company pulls your credit, you've got 30 days in which if any other mortgage company pulls your credit, they're going to get the same thing. You're not going to get hit every single time. And so that's to allow you're not stuck if you go to one mortgage company, get your credit pulled, and then you don't want to work with them, you want to work with somebody else, and they have to pull your credit again. They're going to get exactly the same thing. As long as it's within that 30 days from the first time it was pulled, and it's with the same type of company. So a mortgage company being pulled by another, it was pulled the first time by a mortgage company, it's been pulled again by another mortgage company. You're not going to get hit multiple times. So, but you want to limit credit pulls. You don't want a mortgage company to pull it today, a car company to pull it tomorrow, a credit card company to pull it the next day. All those are going to ding you negatively. They're going to ding you and affect your score. So, what's a good score? A good score is a great score is 740 plus. That would be awesome. But you can qualify for a mortgage with way less than a 740 score. Actually, you can go all the way down to 580. We can do a loan for you if your score is 580 or above. But like we said at the beginning of this video, the higher your score, the more options you get. When you're at 580, the type of loans you can get are very limited. You can only probably get 1 or 2 types of loans, and the restrictions, there will be some restrictions on there that will not be there for somebody who's got a 660, 680, 700 score. So yes, so a 580 score will get you a loan, but of course, the higher you can get it, the better. You don't necessarily have to wait until your score is 740, but just know that get it as high as you can, and that will give you the best opportunities when you're getting your mortgage. So that's a summary of the importance of the credit report and your credit score when you're obtaining a mortgage. The earlier you start working on it, take a look, make sure if there's anything that needs to be fixed on that report, to work on it before you apply for a mortgage, the better. Now, if you are in a situation where you're ready to buy a house now, that's okay. Explain everything that to your mortgage lender, your mortgage broker, and have them look at it. Hopefully they are experienced enough to be able to look at that credit score report and tell you what you need to do in order to fix any issues that are on there, and potentially get you a better score and help you qualify for a mortgage. Are there any things on there that could automatically disqualify you from getting a mortgage? Yes. If you've had a bankruptcy, you have to wait 2 years before you can apply for a mortgage. If you've had a foreclosure, you have to wait 3 years before you can apply for a mortgage. There are different types of mortgages that even require more years than that before you can get a mortgage. But at least with an FHA mortgage, those are the seasoning terms for that. They're pretty much the most lenient. So if you have those on there, then that's from the date of discharge, those seasoning times. If you have that on there, you may need to wait until the seasoning time has passed before you start. Now, you can get a mortgage before 2 years is up for bankruptcy or 3 years for foreclosure. There are what are termed as non-standard or non-QM loans that are out there. But of course, this whole video series is on getting a not so crazy mortgage. Those type of mortgages, though they're available to you, carry higher interest rates and higher terms. And so, why? Well, quite simply because they're risky. They're going against the conventional items or requirements for a mortgage, because they're going to probably hold on to these loans. That's these banks, that is, are going to hold on to these loans, themselves. They can't just sell them out there. They have to, because they've not followed the seasoning terms. So best advice is always let the terms, let the time pass that's required, let it season, that's the word for it, and then you can get a normal mortgage. But there are some times that people need to buy right away. In that case, we can get you one of those non-QM loans, and then once the 2-year seasoning or 3-year seasoning time has passed, you can refinance into a more conventional loan. If you have any judgments on your credit report, those must be taken care of. You can't close a loan with a judgment on it. And either you have to have a payment plan going on with that judgment, and show that you've been paying it for several months, or you want to clear that judgment and get it off entirely. If you have any tax items on there as well, they've got to be taken care of. So that's why it's important to look at your credit report before you apply for a mortgage. Make sure everything is clean, and that will get you the best opportunity to get a not so crazy mortgage. So this is the one of the videos on credit reports. We may, if we have any questions on some, we may need to put out a second one to answer some questions that you may have. But we'll be putting out videos, like I said, on other topics as well. Don't forget to subscribe below so that you get a notification when those videos come out. And also leave us a comment. We'd like to know if we've been helpful to you in any way. So have a great day, and let's keep working on getting that great mortgage for you.